start off with what's happening on the money markets. The shilling a lot stronger at 90 shillings 30 cents. It's putting pressure now on banks to offload dollars because they'd held on to dollars in light of a weakening shilling. That doesn't seem to be such a good thing to do anymore.
Very good afternoon to you, Lerato. Yes, the shilling's improvement doesn't equal too well for those that have been trading against it. So the banks are once again facing some pressure on that. And but now, as we approach the end of the month, the shilling is expected to come under pressure because of the traditional end month kind of dues, and also again the energy sector rather kind of demand. So all in all, the shilling, though it has gained quite a bit and has approached close to the 88 mark yesterday, though today it has gotten back to the 90 mark. Though a lot of us have had that 88 mark as quite a psychological level. Once we get there, then really we expect the shilling to come in under a lot of pressure.
What about parity between the official rate and the parallel market? Because a lot of inflows have come through unofficially, and nobody can really explain these receipts.
Yes, that is an issue of concern throughout the financial markets, that we cannot really officially say that these are the inflows coming in. Now it brings everything under the microscope, in that for a long time there's been speculation that we've had foreign monies come in to boost up the real estate market, to boost up several other markets in the country. And once we kind of see this from a formal kind of report on this kind of a thing, it really raises eyebrows across the field, and it's really doesn't augur too well for the authorities.
All right, let's talk about what we're seeing on the equity side of the market. As Mashudu explained, British American investments down 3.8%. Now, it's newly come to market. There was great expectation for them. Unfortunately, there's been a bearish run, and they seem to have been bitten.
Yes, they seem to have been bitten, but British American Tobacco is actually one of the blue chip stocks, so to speak, in terms of the great dividend payout. Again, that also relates to the kind of industry that they operate under. The tobacco industry globally is also under the microscope relating to health concerns. But British American Tobacco has been doing very, very well in the Eastern African region. Locally, they are doing a lot of manufacturing for the various arms across Eastern Africa. So British American Tobacco, we really do expect them to continue with that great profitability growth because of a lot of the export expectations.
And what about the ones who've come to market, Kimathi, Britek, TransCentury, those kinds of companies?
Yes, the bearish run hasn't really augured well for those that have come onto market this year. And today we got in news that Family Bank has also decided to shelve their IPO coming onto the market this year. So for those that have come onto the market, it really has been a very tough time, and investors are all disappointed. That, of course, has really not done anybody any good, though a lot of analysts and commentators and professionals had really warned about this kind of issue. So we hope that going forward, retail investors and all other investors generally will really take the cue from those who are well versed at navigating the markets.
I mean,
so all in all...
Go ahead, finish your sentence.
So all in all, with the bearish trend, one really is best placed to move towards the more stable counters, whereby you would expect maybe strong dividend returns, and looking at the dividend yields is a great thing.
How would you describe or define the stronger counters? Because I'm looking at Standard Group down 7.4%. This has been a darling of the exchange for the longest time, together with others in the services industry, Equity Bank, Safaricom, and of course we've seen valuations decline across the board. But I mean, stock declines of 7.4% for Standard Group?
Well, for Standard Group today, the volume was absolutely minuscule. I think they traded about 100 shares. So I really wouldn't want to read too much into that. But All in all, for the banking sector especially, now that we have a lot of macro factors coming in directly affecting the banking industry, there are great concerns as to some of the liquidity issues to do with some of these banks. The real question is, how exactly are the banks making some money at this point in time? Because the retail investors, the retail borrowers cannot absolutely service lending rates of 30%, while banks, on the other hand, are actually lending to each other at 30%. So really, one is left to wonder who is in position to service this kind of very high interest rates. And what investors have done is that now the banking stocks are really being punished purely because of this big macroeconomic developments.
We have 30 seconds, Kimathi. Any comment on KQ's exposure to Precision Air and the fact that the IPO was undersubscribed?
Well, looking at the tea leaves, it doesn't look too interesting for KQ because they also want to come into the market through a rights issue, or rather some form of financing. So this doesn't augur too well for Kenya Airways.